Hi guys, welcome back. In today's video, we're going to talk about the golden trading zone. Don't forget to subscribe, like, comment, and share. Hi guys, we're back with another video. Alright, today we're going to talk about the trading golden zone. Now, this is going to be easier for smart money concepts traders or those people who have an understanding of supply and demand trading. Alright, so to make this easy, we're gonna look at this in terms of phases, right? So the first thing that we want to see, in this case, we're gonna use a shorting example, meaning cells, all right? We're gonna look at a cell example in this video. Okay, now the first phase that we want to see, right, for you to identify this golden trading zone is if the market is pushing up, right? We're gonna see the market play around, making higher highs and higher lows, and then the market reaches a supply area. In this case, we are going to see a supply area just above this area. Alright, so once price gets to that supply area, most of the times, right, yes, you can sell right there, right, but to be on the safer side, the first phase that we want to see is we want to see price pushing up, right? This is the first phase that we want to see, right? Once price hits the supply zone, what we want to keep an eye on, right, is an area where price will react to, right? Remember, if an area gets hit many times, there's a possibility that that zone is no longer strong and that zone is considered weak, right? So what we want to see is we want to see rejection. Want to see some reactions at this area, right? So the first phase, we want to see price moving up, right? Second thing we want to see, we want to identify the rejection at a specific order block, right? The order block responsible for pushing price into that supply zone. Fine, all right? So once that happens, what we're going to see is price will then break structure. Right, so as we can see, if price has broken structure, right, and has broken this area that we have identified the reaction, right, we want to see price make a new lower low, right? Once price makes a new lower low, this area right here, remember this area now becomes our supply because this was demand and now price has broken that area, so this area becomes our supply. Right, now the second thing we want to see, right, we want to see price push up, right? But as price pushes up, we don't want to see price, because if we have a supply zone, right, here's an example, we have a supply zone here, price does something like this, right? We expect to take sales at this order block, right? If price just gets into that area, right, with, you know, momentum or large candles, right, it's better for you to not, you know, consider trading this, no matter how good the setup looks, right? What we want to see, because most of the times price will just then break that area. What we want to see is we want to see price get into that area with accumulation, right? We want to see a good price approach, right? In this case, as you can see, this is a this will get retail traders buying because retail traders are taught to follow the trend. So retail traders will be buying. And as we all know that retail traders have got long positions, some traders are using trend lines and all that. Once price reaches the order block, we then expect to see price move to the downside. And then this becomes our take profit, right? So what we want to see here, remember, we are still below this area, right? This is a no trading zone, guys, right? Yes, I know some people who are more advanced would want to take buys or whatever, but to increase your probability, this is a no trading zone, right? So what we want to see is we want to see price move back. Remember, this then becomes a flip area for us, right? So what will usually happen is price will reject this area, right? And after rejecting this area, we all know retail traders will definitely go short because, I mean, this is support turn to resistance, right? And then what we will see from here is we're going to see price push up, right, to a supply level or an order block or points of interest, right? And then we see price continue going down. And as I said, this then becomes our safest take profit, right? So the whole idea behind this, guys, is once price has broken this structure, all right, we do not look for trades below. Once price has given us a new structure, which is a lower low, we want to see price give us a good approach, right? And we're gonna keep an eye out on this one. We don't want to be participants of, you know, trying to sell here, right? Because the whole idea here is retail traders, right, will definitely have their stop losses above this area, right? Once retail traders have their stop losses above this area, there's a lot of money, right, lying around there. There's a lot of money lying around there. So this area becomes our golden zone, meaning we then look for an order block within this area. So this becomes our golden zone, right? And as you can see, this requires a lot of patience, right? But if you can backtest, you will be able to see the probability and accuracy that this setup has in store for you, right? Now, one thing you have to remember, right? If this is our golden zone, right? So, sorry about that. If this is our golden zone, right? And within the golden zone, this is our decision point, right? So let's say we had something like this, right? If this is our decision point, remember, if price aggressively gets back to this area, right, this area no longer becomes, you know, an area which has a high probability of giving you a good trade, right? What we want to see instead is price slowly get there, right? Want to see price slowly get there, right? Want to see price slowing down as it gets there. And once price reaches that area, we'll then consider looking for short opportunities, right? So we can go to the charts and you know, back test, right? Remember, I'll always urge you to go and back test, right? That's the only way that you'll be able to actually master anything that is being taught on this channel, right? That is very, very, very important, right? So this can also apply on the buy side, guys. This can also apply on the buy side. What we can see right here, look at this, right? We had this rejection, multiple rejections, as you can see, right? And if we look at that, as you can see, price was already moving up, right? So we can see price moving up, right? After the multiple rejections, right, our golden zone is below. Remember, our golden zone is below. All right, so after the golden zone, after we identify a golden zone, we then identify our order block. In this case, if we go to the M30, let me just minimize this. Okay, right here. If we go to the M30, what you can see is the zone which is actually responsible, right, for the break of these multiple structures, right, and is below this rejections, right, is this area. This was the order block responsible for that, right? So as you can see, price got back to that area, and that is when we actually continued going up. As you can see, we had some good profits there, and we also had price slowing down. We definitely had price slowing down, as you can see, right? And we had a lot of liquidity being grabbed down there by that move, right? So this is another example, right? Remember, you're not going to find this every time on every pair, right? You're not going to find this every time on every pair, so you need to be very selective. Here's another example, right? We've got our multiple rejections, right? Meaning the area above becomes our golden zone, right? Becomes our golden zone. And as you can see, this area here, right, after, remember, this becomes a no trading zone, right? So after all this happens, price is slowed down. As you can see, price finally makes it to that area, and we can also see some liquidity being grabbed right there. As you can see, this move. And then remember what I said, the beginning of the price approach or the accumulation becomes our take profit. So if you sold there, look at that. All right, you definitely got your first take profit hit there. That's just, you know, meant for you to be on the safe side. Right, so you can definitely find these examples everywhere. Remember, there is no 100% in trading. Right, don't let anyone ever lie to you. There is no 100% in trading. So that's very important. Keep that in mind. So here's another example. Right, as you can see, we had the multiple rejections here. Not really clean. All right, it's not really that clean for me. All right, not really that clean, but we did have price break structure. All right, these multiple structures where those rejections are. Right, and then we can see how price then slowed down. Right, what I'm trying to show you here is price slowing down. We can see how price then slows down, right, and makes its way to the decision point at the golden zone. And then as you can see, price you know, continued moving down. Right, so this can be found anyway, guys, on any pair. This can be found on any pair, any time frame also. This can be found in any pair and any time frame. All right, so here's another one. Right, multiple rejections are right here. You can see this zone getting rejected, and then remember, this becomes a flippy. We all know that retail traders, right, will have their stop losses above that area. Right, remember, this becomes our golden zone. Sorry about that. This becomes our golden zone above this area. Retail traders, you know, will definitely look for shorts, and we can all see what happened at that zone. After this was broken, price went back. Most retail traders would definitely think of going short, because I mean, if you draw your lines, that's a resistance, right? And we can all see what this candle did. Damage, right? That's damage right there. Damage. But as you can see, whatever happens below here, remember, it's a no trading zone. And what I like about this is we had price then slowing down. Price did slow down. I want you to see what price did when price came back to this flip area. Look at that. Retail traders are definitely, you know, getting into the market, and their stop losses are above this area. Right, so in this case, as you can see, if we move to the line chart, we had this area right here. Right, so as you can see, that's more like a, you know, head and shoulder pattern, but we call it an over under. Right, so that was more confluence right there, and then price then moved at this hidden base area right here. And as you can see how price then continued moving down. All right, guys, so we can spend hours and hours looking at the same thing, but remember, the idea behind these videos is for you to learn and actually sit down and actually back test this yourself. Right, that's very, very important. All right, guys, hope you guys learned a lot from this video. Don't forget to comment, like, share, and you know, share with your friends. If you are new here, don't forget to subscribe. You can also join our free Telegram channel. Find the link in the description below.